This tutorial features the head and shoulders pattern. This is one of the most important patterns you will learn from us. We love trading this pattern because we're quite experienced at it and we know quite a lot of points that other traders don't know. What you get is you get a healthy bull market. So a share that you're watching or trading will be going up and up and up, and then you'll get one of these patterns, and it's basically the point where the bull market morphs into a bear market. So it is the pattern that is sort of a transitionary period from the share going up and up and up to the share now going down and down and down. This pattern formed on the US indices in 2007, 2008 and caused probably the biggest stock market crash of our generation. So, and actually we've got some really good examples to show you on how people can lose so much money if they don't understand how this pattern works or they fail to identify it. So let's crack on with some real examples. So this is the chart for Aquarius Platinum. It's a platinum mining company. We've identified a head and shoulders pattern. We had a series of higher highs, etc. And then it put in, this is a small version of a head and shoulders, but do you see what happened? We failed to make a higher high. We made a lower high, and then the market broke down. This is an old chart. We actually ended up down here on Aquarius Platinum. So that is quite a strong reversal point, and we was actually trading this at the point at the time, and we went short at the right time. So it's so important to get this pattern right, and here is why this pattern works, because what you'll have is in a bull market you'll make what's called higher highs and higher lows, which basically propels the market upwards. So we are making higher highs because it's higher than that high, and we make a higher low than the last low, and we keep doing that, and that's what you'll get in a bull market. And then you'll put in a higher high, then you'll start to put in a lower high. That can happen in healthy bull markets. It just carries on going upwards. So you need to keep watching. If it makes a lower low, it'll start making a lower high, etc. You're now in a probably a bear market, but you're going to have to watch for long-term support lines. But if we just highlight, this could be the head and shoulders, because it is the point at which you start making lower highs and lower lows. And that would be the head and shoulders. That would be the point where the market starts breaking down. So some of the basic principles is this represents a top-in pattern, which, as we said, is the point where uptrends reverse and turn into downtrends. The first warning sign is a lower high, normally on lower volume than the head as well. It's a strong reversal pattern and has high success rates of reversing markets. That's why we like trading this so much, and we're going to show you something that we've traded on bonds and something we traded on a share a few years ago as well. So this is the chart for the US Treasury bonds. Can you spot a head and shoulders on the screen? Well, you should be able to, because it's quite a obvious one right in the middle of the screen. We had quite a nice uptrend on bonds, and we formed a nice sort of rounding top, but then we got above it. We bested the previous high, so we made a higher high, which is fine, nice bull market. Here's where the problem is. We made a higher low, which is brilliant, because then you should go on and make a higher high. But we don't. We actually fail, and we make a lower high. At that point, we was going on about this on our forum. We're actually seeing a lower high on bonds, and it looks like a massive head and shoulders was forming. We've been short on this since the 145. And we are down here now, and we think we will get to the trend line. That we'll point out to you why we've drawn this trend line is because if you connect all the low points and draw a line, basically like our support tutorial, and then extend that line outwards, then what you should get is you should get the price break down even more, and that's just by knowing the head and shoulders and how it works on a stock market chart. And basically as well, on our DVD, we talk a lot about head and shoulders, and there are actually ways of measuring and extending the price objective. What we mean by that is there's certain measuring techniques you can use, and it basically tells you how low the market is going to go. So if you're short selling, meaning you make money as the price goes down, you know you can keep your profits running until you get to a certain measured point. If you wanted to buy these shares or whatever, you would let it come down to that measured point before you thought about buying. So that's on our DVD, and we talk through Head and Shoulders a lot on there, and price objectives. This is the most obvious Head and Shoulders pattern you'll probably see. This is Excite Energy. This is a bubble. Anything that shoots up this quick is unsustainable. So it was no surprise really when we see a topping pattern here. We will teach you how to trade these on our DVD because we've only got a set amount of time at the moment. When at the time, around this point here, we remember someone talking on a forum saying he was remortgaging his house to buy more shares in Excite Energy. We was looking at the charts and thinking, I wouldn't do that if I was you. His wife probably killed him over that. But anyway, on our DVD, we teach you how to draw necklines and how to use the price objectives as well. This would be a neckline here. So on a neckline, as soon as you start trading below the neckline, that is a sell signal. And you can see the sell signal is quite high here. So anyone trading this on the short side would have made an absolute fortune very quickly. And we teach you how to do that on our DVD.